Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Now let's take a look at some of the stocks on the move today in Europe. I'm Lizzie Burden in London with Stephen Carroll in Brussels, and we're joined by Bloomberg reporter Chloe Melly. Chloe, let's start with Ryanair. I spoke to the CFO earlier this morning and things were looking up for them then, but the share price now not exactly jetting away.
No, absolutely. Ryanair raised guidance for passenger growth and fares, so that explains why the CFO was probably quite happy this morning, and that was thanks to a really strong travel demand and also a good progress being made on Boeing deliveries. So that was an area of quite a lot of frustration over the last year, but that's now getting a lot better. But shares did fall a little, as you mentioned this morning, because analysts are seeing this outlook as perhaps quite cautious, quite conservative. But they did say that this is not really a massive cause for concern. And even with a little bit of weakness in the share price, Ryanair is still way ahead of low-cost rivals like Wizz Air and EasyJet. So it's on a pretty good standing, even despite this little bit of weakness this morning. And also, the results just come a few days after the spat between the CEO, Michael O'Leary, and Elon Musk, which was over the Starlink Wi-Fi service from SpaceX. And Ryanair said that it helped bookings thanks to a little bit more publicity. And the CFO today reiterated that the airline does not want that Wi-Fi service because of the cost of installation being quite high, and also passengers not wanting to pay for Wi-Fi on those really short flights, which I completely agree with.
Yeah, you called Elon Musk a big idiot when I was speaking to him, so it helped the bookings.
We're going to turn now to some stocks in France. A crisis in infant formula following Danone's recall of some infant formula batches. We've got several shares under pressure there.
Yeah, so Danone, but also Nestlé and Groupe Lactalis, all of those companies are caught in the middle of this infant formula crisis. And this actually started with Nestlé, but now we have those other two, Danone and Groupe Lactalis, pulling products that are potentially contaminated with a toxin, and that is related to an international supplier, and that's affecting a lot of different markets, a lot of different countries. And Danone is particularly under pressure today because it expanded a recall of some of those batches, infant formula batches, to more European markets late on Friday, and it said that it was due to changing standards from regulators, and it reiterated that its products were safe and that the recall was a completely precautionary measure. But we are seeing those shares are down this morning, and a lot of those other stocks as well. And Reckitt was also down, Groupe Lactalis was also down, and Nestlé is not down as much, but it's actually the company that is the worst affected. It had to pull products from in shelves from more than 60 countries, and an analyst at Barclays said that the cost of Danone could be up to 100 million euros, but that the financial damage for Nestlé could actually be 10 times higher. And so obviously this poses quite a lot of questions about control standards, quality standards, investments in production sites. And so this is going to be a story to follow as those companies also report in the next few weeks.
Okay. And Chloe, I hate to leave things on a sour note, but it looks like we could have another London Stock Exchange exit. Some PE names swirling around. Spire Healthcare. How's the market reacting?
Well, the market is reacting very positively for Spire Healthcare. The shares actually surged this morning because of that potential private equity deal. And the talks are still preliminary. There are still potentially other suitors, but this is actually some time in the making for Spire Healthcare, because back in September it confirmed it was working with Rothschild and exploring some options, including a potential sale. And right now the bid comes at a time of quite a lot of weakness for Spire Healthcare. It had a massive profit warning back in December, and that had really sent the shares plunging. But if the deal happens, it might be great for shareholders, but as you say, it might be another big loss for the London Stock Exchange. Within that same sector of kind of healthcare real estate, we had Assura last year, which was bought by Primary Health Properties, and that was after quite a long takeover battle that involved another private equity firm, KKR, if we remember. So we have that private equity swirling, and that potential another big loss for the London Stock Exchange. So that'll be something to look out for as well.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.